The following is for entertainment purposes only. We are not financial advisors. We are not responsible for any losses, only the profits.
Octo Nation, it's Charlie. I'm going to be your host for today. This video here, I easily could have made 3 days straight. Just did a live stream for 3 days straight, and just sat here with a bucket of chicken and something to drink and, just went the whole time. But I decided to condense it as much as I could to try to make it make sense in the littlest amount of time because I don't want to waste anyone's time. So I'll jump right into it. How to 3x your money easy in the stock market. We're talking about Fannie and Freddie. Y'all heard of them? Fannie and Freddie, brother and sister? I don't know. Twins? What are they? U.S. Supreme Court decision that's pending for FNMAS and FMCKJ. So what and who is Fannie and Freddie Mac to the daddy? How Fannie Mae and Freddie Mac help you get a mortgage. Fannie Mae and Freddie Mac exist to support the U.S. home mortgage system, but they don't lend money to individuals. Many people think they do, they don't. Instead, they buy mortgages, loans, and banks from the banks and financial institutions that originate them. So what happens is Bank of America, you go into your favorite mortgage company, you buy it, go in to get a loan. It's most stressful 6 months or 6 weeks of your life. You get through that. It's finally over with. And then what happens? You think you're going to use them forever. It could go to a different bank, but what happens a lot of times is it heads on over to Fannie and Freddie. Boom, they just buy it. They buy it in big packages of them, hundreds and thousands at a time. Instead, they buy mortgage loans from the banks and buy financial institutions that originate them. Okay? This keeps money flowing back into lending institutions so they have plenty of funding on hand to write more mortgages and help more people buy homes. So banks can loan at a certain percent of what they have. So say they have, the Bank of America has $100. Okay, they have one person that deposited their first bank customer, they deposited $100. So there is a rule where they can loan basically like 10x of that $100. So then next Susie comes in and Susie says, hey, I want to become a member, but before I do, I would let you know I have no money, but I would like a loan for $1,000. And they say, well, you're in luck because guess what, Susie? We have $100 in our bank account and we can loan 10x on that. So we're going to give you that $1,000 loan. Okay. And so now they can free up that loanable money they have. And that's why they like passing it on to other people so they can create more loans and keep passing them over and passing them over. So Fannie Mae and Freddie Mac are government-sponsored enterprises. Fannie and Freddie are private corporations that were chartered by Congress. The formal term for this kind of company is a government-sponsored enterprise, or GSE. There are several other GSEs, like the Farm Credit System. While GSEs are publicly traded companies, they all serve a very public mission of supporting the nation's financial system. Because of the large role they play in the economy and their governmental affiliation, some investors assume they are implicitly guaranteed by the federal government, solely funded by or backed by the government. This means they believe the government would bail out Fannie and Freddie if they couldn't pay back their debts. Even though Freddie and Fannie Mae technically shareholder owned, they have been under government censorship since the Great Recession. If you don't know what that is, that was about 2000, 2008, 2009 when there was a big blast in the economy. And they're blaming it on the fact that the loan companies were doing what's called liar loans, is the quote unquote term for it. Basically, you could walk into a bank and say, oh yeah, I make like $1 million a year, so give me this $1 million house. I'll pay it, I promise. And they're like, okay, sign here. So that's what they're blaming the Great Recession and pop of the economy, everything crashed and what the heck. Many investors who hold stock in the two companies are eagerly waiting for them to emerge from the government control so their stock can trade on the public exchanges again. Some things to keep in mind about these two companies include the Treasury buys securities from Fannie Mae and Freddie Mac. Fannie and Freddie don't have to pay state or local taxes. Some of the board members are appointed by the president. For now, the federal government has complete oversight over them due to the conservationship arrangement. because of the 2008. However, all parties involved, including the FHFA, have retained advisors to help them get back on track for non-governmental ownership. In 2014, FHFA published a strategic plan for releasing Freddie and Fannie from conservatorship. The plan has three big goals: to prevent foreclosures and keep mortgage credit flowing in a safe and sound manner, to keep housing finance markets resilient, liquid, and efficient, to reduce taxpayer risk by encouraging more private capital in the mortgage market. This goal would decrease the role that Freddie and Fannie play to mortgages. Build a new infrastructure for securitizing single-family residential mortgages. Okay, so these guys are just used as like the clutch, kind of the middleman for mortgages. Okay, so banks can keep loaning if they have more money to loan, and if they need more money to loan, they're going to sell a package of these to them, and then they're going to help with regulations and kind of be the middleman between government security and banks. Kind of. It is very, very convoluted, and and that's where I was saying you could probably talk for days upon days upon days about it, but I'm going to try to keep it as simple as possible. The idea is to create a system that keeps mortgages affordable, accessible, but without the implicit guarantee that contributed to the financial crisis of 2008. So they're basically saying, the government now controls them because they're blaming it on them. They're like, you guys messed up. You gave these dumb loans. It's your fault. These adjustable rate mortgages, these ARMs. There's a lot of countries that still have those, such as Australia, where you start out at 7.99% mortgage rate, and adjustable rate starts happening after whatever X amount of years, and all of a sudden that gets bumped up to 9. Then a couple years from there, it gets bumped up to 13%. Okay, so now your payment, your payment started at $1,500 a month, it is now up to $2,700 a month, and it keeps getting worse. So it really hurts people in the long run, because people get greedy and overbuy what they can't afford, and they probably have never even did the calculations for that time. They just think, oh, we'll figure it out later. Okay, so the government stepped in to say, okay, we need to help control this because you guys jack some stuff up. And since then they've been trying to come out and be like, no, we don't need your help, we'll be fine, let us do it again. All right, so how do we make money on the Freddie and Fannie Mae's? Holders of the junior preferred stock are certainly taking a gamble, but a group of deep-pocketed hedge fund managers are making big bets for a payday. Now that both companies are profitable, shareholders are suing the government, claiming they are unjustly taking an excess of funds that should belong to the preferred shareholders. The junior preferred shareholders have a collective face value of about $35 billion, and the primary aim of the lawsuits is to get a full payout of the shares. The bailout of Fannie-Freddie cost taxpayers $188 billion, and since the companies have returned more than $200 billion to the Treasury already. So they've already paid them back. All right, it's easy to see why shareholders feel they should be made whole on the par value of their investments. So par value is kind of like with SPACs, like we talk about, like the floor, okay, like as low as they can go, or what they should be going for, kind of. So what, all right? Treasury Secretary Steve Mnuchin gave investors some much wanted details, saying on Fox Business that an agreement between the Treasury and the FHFA that would end the profit sweep from the two companies is in the works. Okay, so what's happening is the shareholders are suing and saying, hey, we want to get our stocks back, and we think that we should have the par value, and it is illegal for the government to come in and do what they're doing. Okay, so it's kind of like a socialist thing that kind of happened, or a nationalist, I guess you call it nationalist thing that happened. Basically, they came in and said, we're going to buy this as the government. I can understand why they did if they really think that they're the reason that they jacked everything up. But of course, there's always a bigger macro picture than what is allocated in front of us. Okay, allowing them to retain the earnings and recapitalize. If you aren't familiar, since the government's crisis era bailout, Fannie and Freddie have been required to send their profits to the government. Okay, so they paid them back. They paid the government back for all the mess up stuff, but now they're still just giving them all the money. Okay. So now what? So Munich said that the forthcoming agreement would produce a significant increase in the capital and a step in the right direction to ultimately raising third-party capital, and also emphasized that the priority is to build up adequate capital before the companies are released from government control. So they're saying, they want them to have enough back money. They want to make sure that they're not going to mess this up again. They want to make sure everything is on track before the government says, okay, we'll leave you alone. Good luck. The government focus on building up capital for the companies is a big step in the right direction, and investors seem to agree. Though proposed by the Trump administration, it seems, so the Munich guy, he's run from Trump. Okay, so Trump is really trying to push this, and I think it is good to get, I'm all for the less government involved in stuff, the more I think the big picture of things work out for more freedom for the individualized department. Okay, so like the smaller the government, the more freedom I'm probably going to end up having, and that's just how it is. Okay, so I am for this. So oddly though, there are a lot of Democrats that are also on board. So it seems like both Democrats and Republicans are on board for this, but it doesn't mean that there won't be litigation. So, how crazy it is nowadays, no matter what, even if something totally makes sense on either side, or sometimes I think they're both agreeing, but they just will fight and disagree to disagree, and it's just a cat and mouse game. There could still be kind of that, there could be guys in the Supreme Court that lean a different way, and just to piss Trump off because Trump's leading it, they're gonna be like, no, like, I like it, but I just, no. So hopefully that doesn't happen, but it could happen. So it's something to realize that is a possibility. The various types of preferred shares have either a $25 or a $50 par value, kind of that floor, okay, that they should have, the original cost and theoretical redemption price, and have coupon or interest rates ranging from 5% to 8.25% of the par value. For a full list, you can click here and get more information on all those. So a good friend of mine, the guy's pretty much a genius, I'd say, goes by Zachary Gaines, is what he wanted me to call him. He wrote, "That's why we'll come out of conservationship in Supreme Court case hearing come October. Preferred shareholders like myself have been winning court battles after court battles to finally reach this point. 8 years in the making. They will issue a new IPO to current FNMAS holders at $25 a share, most likely after the case decision. 2008, government took over Fannie and collected fees from the mortgage payments / profits. In 2011, the bailout completely paid back Fannie with interest and then some. So they were already paid off 3 years later. So that's good. In 2012, the lawsuit started for the government and no longer received profits since bailout was paid back. So they haven't got any money back. So remove government control. Steve Munich will finally free up Fannie Mae. Said buy now, hold for 6 months, profit 300% easy. We'll get to the charts to show you how that's possible here. And a picture of this dude. I don't know who that is. Does anyone know who that is? It's another guy's good friend of mine's, Liquid SRX, XRK. The hearing is in the next Supreme Court session. That will be the first case they hear. So that's interesting. This moved all the way up the court system. They were battling forever, and now we're at the Supreme. Yeah, Supreme. Taco Supreme, most expensive thing on the menu, all right? So in October or November is when this is taking place. In other words, now is the time to buy. Mr. Zachary Gaines again said, essentially, it's a recapitalization structure case, and I like how he said that. Essentially, it's a recapitalization structure case. So just moving things around, moving the structure around. And if they win, preferred shareholders receive par value, which is $25, or the issuance price. It's a good gamble, but who knows? So where am I at on this? So this has already made all its way up the court ladder into the Supreme Court, which is a big deal. If it's something totally bogus, usually it's shot down the first couple stages or whatever. Make it to the Supreme. That means it's like, well, dude, it's a good fight. Why not? So I think it's just figuring out the fine, minute details, because there are a lot of little details that can get involved. details in regulations and stuff too, which I think that there still should be, like they should probably make it so you can't do the ARM loans anymore, the adjustable rate mortgages. And if they do, make it like you can only move it like certain percents, like a half up here and there, or 1.5 max or something. Because again, they were like jumping them. They were giving people in 2008, they were giving them like 2 different mortgages. They'd be like, okay, you want a loan for $200,000, we'll give you a loan for $120,000 at 8.99%, which is not a good rate nowadays, at least. And then we're also going to give you one that's in an adjustable rate mortgage for the remaining balance. So we'll give you one that's at 13.6%, at another for the rest of the 50 grand or whatever. So they were doing all these crazy loans that were just not healthy, especially for people that couldn't afford them, right? So I think that this will most likely get passed, and we can make some serious multipliers. I could also see this gradually riding bull up till the decision time. So let's take a look at the charts and how I think I'm going to play this one. So we'll take a look at FNMAS here. So right away, do you see what I see here? I see a line that needs to get drawn. So I'm going to draw it. We are writing a line here trying to break. And so if you guys know me, you know what I'm going to probably try to do. I'm probably going to put a buy-in above it because look, it's at this consolidation pattern. It's used this a couple times here, major, down at this gap down here, major, and march this tank down with everything else to $4.90. But right now we're back up to $8.62. We definitely have a major line here. Let's draw that baby in. Straight across, like it's been tagged here, okay? And it's come up, tagged it twice. It's broke out above it slightly, but so I think, how am I going to play this? I think I'm going to play this. There's a line here though that's pretty major. It's only hit twice though. Maybe further back, we'll have to see. But this is right about like $10 or $9.72. So how I'd probably play this is maybe get it above 10. Maybe even above this, somewhere around like 1050-ish. Basically, if it hits around 1050, it probably is going to go all the way up to, at least 12-ish. So I'd probably put a buy-in till then. I do think that the closer this gets to October or November, where the hearings really start, Supreme Court, I think that this will probably start jumping up a little bit. So, me, I'd like to catch it on its rise up instead of just parking it there for another 5 years, because this could take another long time to happen. The other problem with this is what's going on right now. Okay, the mortgage industry and the housing market industry, I'm working on a whole video about that, but to me, if they're legitimately going to do this correctly, they should probably wait until like next year for this. Why? Because the way things are going right now are nuts, and if they let them go, I think that it could be kind of like a like a suicide mission for them, because unless they put in some hard rules, because a lot of people are probably scared that what are they gonna do? They're gonna raise interest rates. Why? Because they can make more money. Okay. They raise interest rates. I think that will be the final nail in the coffin for the housing market right now. I think one of the best pieces of advice for real estate you'll probably hear is, don't follow the trend. Okay, I always talk about following the trend, but in real estate, you don't follow the trend, right? So when mortgage rates are super low, like they are currently right now, and they were 6 months ago, everyone is freaking out and buying. Yeah. So if everyone is freaking out and buying, what do you think you should do? You think you should jump on track because the mortgage and the 27 realtors are telling you, great time to buy. Look how low interest rates are. The economy's fantastic. No. If interest rates, the easiest way to tell when you should buy, if interest rates are low, it is probably not the right time to buy. Why? Because there is such a demand. When there's more demand, the price keeps going up. All right, so you've got more competition driving the prices up because everyone is getting in on it. You want to buy when the interest rates are sky high, because guess what? When the interest rates are sky high, the prices of houses go down. So the way to play it is wait till the interest rates are super high and no one's buying, and everyone's like, forget this because no one's going to be buying, so the prices of the houses are going to go down. So you buy then, and then you wait until that whole cycle then goes on repeat until the interest rates are low again. Then you can refinance that, But I'm trying to not get off track here too much. But there you go. All right, let's actually zoom out like I talked about. Let's see if we've got any other major lines that might connect to this channel here. Let's bring it out 5 years. Oops, it's gonna make me reload it here. That's fine. All right, let's draw on this line again. Let's zoom out. Where are we at? Y'all see anything? I don't see much. Yeah, there's still another line back in here that connects it, and then there's one back here. So yeah, we're right in this super line here around like 850. It needs to break out of this. It needs to get above like 926, 931 to 10 for sure. And then above then it's pretty much ready to rock, unless it gets about, to 14 or something. But, this is something to keep in your back pocket. I wouldn't say, jump on this tomorrow, but be aware of it, maybe even put a buy in, like I was saying, above it to try to catch it above, because would I like a 3x multiplier just for a court decision? Yeah, that'd be pretty sweet. Because, too, I mean, imagine if that does happen, right? And like, say it hasn't even gone up, it's just sitting there. You're basically 3x your money because it's sitting at $8.62 right now. It's going to go to 25 at basically that, let's call it the floor, but I still think it's going to probably ride even higher past that, so that's just where it's going to floor. So once that court decision is made, it's going to probably go even higher than that. So man, so how I'd play that is, get in, like I said, keep following this, maybe put a buy-in above it there. And then, if that court decision is made and it finally releases at 25, I'd probably like sell half or whatever, and then just let the rest go for some more pop, or who knows, but we can get into that later. I just want to bring this one up. All right. And if you guys have any more, thoughts on that one too, or anything I've missed or any information that's like major, put it down in the comments, let me know. So we've also got some news. Let's take a look. I want to actually, let me bring up my macro thesis again, see if I missed anything. This could be used as a clutch for things to go wrong. We talked about that. The timing of this could not be better for them to clutch on it, because the government too could slyly just hand this over and be like, okay, no, yeah, this is the perfect time, even though they know it's definitely not the time to trust someone with mortgages and controlling them. And then if they lay this over to them, they will more than likely start raising interest rates, which will further drive the nail into the looming recession coffin. If you get in, there are a ton of tickers to pick. Yeah. So, this could be played so many ways by the people involved, Like I said, they could release it to them knowing that they're going to screw it up. And then what they could do is then a year from now be like, oh, see, this is all Fannie and Freddie Mae's fault. That's why the economy's screwed up, and that's why the housing market has crashed. It's Fannie. See, we shouldn't have let them go. It's their fault. Even though they know. I mean, the people know that this is not a good time for this to happen. So if it does happen, and they're still pushing it, it could be used in a bad, evil way. So just keep that in mind. Okay. Now, oh yeah, there's tons of tickers involved with these, but if you get them, I think the safer plays are the ones mentioned. So go here and look up these ones. These are what most people are saying are the safest to get, and I agree. So let's get to some news. So Fisker Inc.'s MOU with Magna deal will put into a production by late 2022, 2 years from now. So if y'all haven't heard, Fisker finally announced who's making the cars. It's a company called Magna Steyr. Okay. They'll announce it later on Monday that it's signed a memorandum and understanding with Magna Steyr to have the Ocean produced at its Graz, Austria. It's crazy. In Austria. How much is it going to cost to ship those over there? Sure it's only going to cost 40 grand for these? Find out. May later add production capacity for Fisker in both North America and China. Okay, there you go. According to several well-placed insiders close to the negotiations. Go check on my pizza. So who is Magna? Are they cool or known? What are they doing? So let's take a look. So I hadn't heard of these guys, but man, you dove in a tiny bit and they are all over the place. They have worked with basically like everyone from like Ford to Toyota to BMW. Okay. They even worked on like this new Toyota Supra, which is actually kind of a BMW. But anyways, they made this like groundbreaking space frame out of thermal plastic. It's a liftgate technology that first debuted in 2020. The Toyota Supra blasted out of the magnet starter assembly plant in Graz, Austria later this year. So they make all sorts of stuff. I mean, these guys are just like all over the place. Basically, if you need like a custom car, anything made, dude, these guys will do it. So even Jeep has worked with them. I mean, basically everyone. Let's take a look at some more stuff. So welcome to mobility. So here we go. They do like self-driving. Okay, they got the big sensors up there. Future-ready seating, so they have like turned around seating we saw in the canoes. Okay, unlocking autonomous driving. So these guys can do it all. They can basically build you a frame, build you a seat. They can make it self-driving. They can do all that stuff. So these guys know what they're doing. They've been around for a long time too. So I think it's a cool move. I mean, of course it'd be better. The brand of Volkswagen would probably be better than these guys, but honestly, I think this is a good play for them. I think the stock went down a tiny bit once this was released, probably because it wasn't Volkswagen, but regardless, I don't think this is a bad move. I just think it hurt people because, again, the CEO Fisker made a big mistake by name dropping Volkswagen. He shouldn't have done that unless we were going to actually get Volkswagen. He should have been name dropping these guys the whole time and talking them up. But he didn't. So that's his own fault. He shot himself in the foot. But regardless, I mean, these guys know what they're doing. Great. I think they'll be totally fine. Also want to let everyone know that HYMC, the Highcraft Mining, they're going to release their second quarter financial and operating results on Monday, August 10th. When is that? That's this Monday. Okay. So they've got a conference call at 11 a.m. I don't think it's going to be very good. Why? Because they're not going to 3x their production until they're done with those other leach pads, which won't be done till into September, I think. Yeah, into September. So who knows? They could end up posting some, a little bit of increase, but regardless, it's not going to be breathtaking or anything. So I went ahead and pulled out of this one on Friday. All right. So I pulled out of this one. It's up to you what to do. This is one, again, that you're probably fine if you just write it a little bit, but I went ahead and pulled out. Usually what will happen in the mining sector is if they have like some lower results, or whatever, no matter what, there's gonna be some reaction where you'll see a sell-off like 1 or 2 day, 3 or 4 days even. But then that's a good time to buy. So I went ahead and pulled out, and I'm gonna watch it, and I'm gonna listen to this because you never know. They can be like, we 3x everything already. So then I might miss a big run up there. But chances are it might be kind of low, and people are like, oh, that kind of sucks. So I'll probably end up buying in, I'm guessing, like late last week, as long as the metals hold up. And also, so I follow this guy named JMac Investor. He has a YouTube channel. Never watched his show, but I've talked to him a couple times. He's a cool guy. Seems like a cool guy. Anyways, he brought up this here, and I thought it was very interesting for LCA. Y'all in LCA, that's the Golden Nugget mobile online gaming stuff. So take a look at this. This absolutely proves what we were saying. And this shows the internet gaming, and it shows how much they're making under internet gaming. And in 2020, basically Golden Nugget is over almost 2xing what anyone else did. Borgata, I don't even know who they are, but they did 16 million, but Golden Nugget did 29 million. Caesars Entertainment, they only did 8.7 million. Hard Rock only did 5.7. Ocean 1, Resorts Digital 17. The Tropicana only did 6 million. But look at this, they did 29 million. So they blew it out of the park. So they're blowing everyone out of the park when it comes to internet gaming. And as for sports stuff, they also have a piece of that sports waging revenue. Hard Rock did a lot better than them on that. Same with Borgata, but regardless, this shows how much money is out there. So take a look at this. I just thought this was really neat and why I'm still going to be totally long LCA. So, all right, if y'all have any other plays you want me to take a look at, let me know down in the comments. I started putting some affiliate links down in the description, like even ones for Amazon. So if you're going to buy something from Amazon, it'd be sweet if you could click the link for mine, and then it will, I think anything you purchase in the next day or something, I'll get a little percent of it or something like that. So that'd be cool. And don't forget about the silver contest. Once we hit 1,000 subscribers, I'm going to give away some, and I think I already got the next one lined up that I want to do, so I'm excited to announce that. And that one's going to be pretty big. So thanks again, everyone, and hope you all have a good Sunday night.